Hello, good day. This is our module 2 for our public accounting and budgeting class titled Government Accounting and Budgeting Process. So before we go to the main topic of this course, we have to discuss first the overview of the budget system. On this part, this is the origin of the budget system. So the term budget was originated from the Middle English word "bogey" that had derived from the Latin word "bulga", which means bag or purse. The concept of budgeting has not been the product of recent economies. In reality, financing public goals and activities was an idea that existed from the creation of the state. To protect the people, the territory, and sovereignty of the state, its government must perform vital functions that required public expenditures. So, at the beginning, enormous public expenditures were spent for war activities, preservation of peace and order, security, administration of justice, religion, and supply of limited goods and services. So, on this part, we have identified that um, these activities are the main focus for their financing activities. So we have identified that the public expenditure and expenditures were identified towards spending for war activities, which was prevalent at that time, preservation of peace and order, security, administration of justice, religion, and supply of limited goods and services. So, in order to finance those expenditures, the state raised revenues through taxes and impositions. Thus, budgeting became necessary to allocate public revenues for specific government functions. The state's budgeting mechanism eventually developed through the years with the growing functions of its government and changes in its market economy. The Philippine budget system has been greatly influenced by Western public financial institutions. This is because of the country's past as a colony successively of Spain and the United States for a long period of time. So many aspects of the country's public fiscal administration, including its budget system, have been naturally patterned after the practices and experiences of the Western public financial institutions. So, as the collection of taxes by the state has increased, the need for public expenditures has also increased. To allow the government to spend efficiently on its expenditures, budgeting has been an important role, has an important role for their expenditures. No, so next, the budget process in the Philippines evolved from the early years of the American regime up to the passage of the Jones Law in 1916. A budget office was created within the Department of Finance by the Jones Law to discharge the budgeting function and was given the responsibility to assist in the preparation of an executive budget for submission to the Philippine legislature. As early as under the 1935 Constitution, a budget policy and a budget procedure were established and subsequently strengthened through the enactment of laws and executive acts. EO number 25, issued by President Manuel L. Quezon on April 25, 1936, created the Budget Commission to serve as the agency that carried out the President's responsibility of preparing the budget. Commonwealth Act number 246, the first budget law, went into effect on January 1, 1938 and established the Philippine budget process. The law also provided a line item budget as the framework of the government's budgeting system, with emphasis on the observance of a balanced budget to tie proposed expenditures with existing revenues. So, on this balanced budget, expenditures shall be equal with the existing revenues. The Commonwealth Act No. 246 governed the budget process until the passage on June 5, 1954 of Republic Act No. 992, whereby Congress introduced performance budgeting to give importance to functions, projects, and activities in terms of expected result. RA number 992 also enhanced the role of the Budget Commission as the fiscal arm of the government. The 1973 Constitution and various presidential decrees directed a series of budgetary reforms that culminated in the enactment of Presidential Decree number 1177 that President Marcos issued on July 30, 1977, and of Presidential Decree number 1405 issued on June 11, 1978. PD number 1405 converted the Budget Commission into the Ministry of Budget and gave its head the rank of a cabinet member. The Ministry of Budget was later renamed the Office of Budget and Management under EO number 711. The OBM became the DBM, or the Department of Budget and Management, pursuant to Executive Order number 292 effective on November 24, 1989. So let's just recall again the brief history of our Philippine budget system, or yung mismong sa office mismo ng DBM. So initially, again, it was Budget Commission, then it became the Ministry of Budget and Ministry of Budget. The Ministry of Budget was renamed to Office of Budget and Management, and now we know it as the Department of Budget and Management. So we have four phases of the Philippine budget cycle. First is the budget preparation, the budget legislation, the budget execution, and accountability. Each phase is distinctly separate from the others, but they overlap in the implementation of the budget during the budget year. This is actually true because during the year, may times talaga na nagkakasabay-sabay yung phases na 'to. So, hindi ibig sabihin na kapag natapos na ang budget preparation, dun pa lang mag-start ang budget legislation, or kung kailan nagtatapos ang budget legislation, dun pa lang mag-start yung budget execution. Due to time constraint minsan, nag-overlap yung implementation ng budget during the budget year. Uh, yung four phases of the budget process is visually identified as this one. So, again, it is a cycle. So, paulit-ulit lang siya. So, kapag matapos yung isang cycle, babalik ulit siya for another fiscal year. So, again, budget preparation, budget legislation, budget execution, accountability, back to budget preparation again. Now, we will be discussing the details for the four phases of the budget process. So the first one is budget preparation. The budget preparation phase is commenced through the issuance of a budget call by the Department of Budget and Management. So what is a budget call? It contains budget parameters earlier set by the Development Budget Coordination Committee. So this committee is within the office or within the Department of Budget and Management, as well as policy guidelines and procedures to aid government agencies in the preparation and submission of their budget proposal. I would like to highlight lang pala na ang discussion natin ng budget process is patterned with the national government, with the budget process of the national government agencies. On the um, next schedule natin, baka pwede natin ma-discuss yung kung ano ba yung pagkakaiba-iba ng budget process with, or ano yung similarities ng budget process with ng national government with the local government units. Okay, so continue. So there are two kinds of budget call. First is a national budget call and the corporate budget call. A national budget call is addressed to all agencies, including state universities and colleges. And the corporate budget call is addressed to all government owned and controlled corporations or GOCCs and government financial institutions. So, yun yung pagkakaiba mismo ng dalawang budget call na to. Kung sino yung ah, kanino naka-address, kaninong agency, sinong corporation ang ina-address ng budget call ng DBM. Okay, and again, the national budget call are for the national government agencies, the DepEd, DPWH, and our state universities and colleges, including na nga yung University of Eastern Philippines. And for the corporate budget call, ito ay ina-address naman sa ating mga GOCC such as PAGCOR and other government financial institutions. Following the issuance of the budget call, the various departments and agencies submit their respective agency budget proposals to the DBM. To boost citizen participation, the current administration has tasked the various departments and agencies to partner with civil society organizations and other citizen stakeholders in the preparation of the agency budget proposal, which proposals are then presented before a technical panel of the DBM in scheduled budget hearings, wherein the various departments and agencies are given the opportunity to defend their budget proposals. So this defense of their budget proposal is done within the executive branch. Okay, so since this is budget preparation pa lamang, iba ito dun sa pag-defend na ng bawat national government agencies ng kanilang budget proposal dun sa harap ng mga representatives natin kasi part na yun ng budget legislation. So the viewers of the DBM will review the agency budget proposal and will come up with recommendations for the executive review board comprised by the DBM secretary and the senior officials of the Department of Budget and Management. So, yung discussion ng ERB or the Executive Review Board will cover the prioritization of programs of each national government agencies and their corresponding support vis-a-vis the priority agenda of the national government and their implementation. The DBM next consolidates the recommended agency budgets into two: the National Expenditure Program or NEP and the Budget of Expenditures and Sources of Financing or the BESF. The details of selected programs and projects is the more detailed disaggregation of key project activities and programs in the National Expenditure Program, especially those in line with the national government's development plan. The staffing summary provides the staffing complement of each department and agency, including the number of positions and amounts allocated. The NEP and BESF are thereafter presented by the DBM and the DBCC to the President and the Cabinet for further refinements or reprioritization. Once the NEP and the BESF are approved by the President and the Cabinet, the DBM prepares the budget documents for submission to Congress. The budget documents consist of three: the President's budget message, through which the President explains the policy framework and the budget priorities, the BESF, and the NEP. So there are two categories of public or government expenditures. We have the capital expenditures or outlays and the current operating expenditures. So these capital expenditures or outlays are assets of the government, the usefulness of which will last for more than 1 year. This includes the investments in the capital of government-owned or controlled corporations and their subsidiaries. In accounting parlance, there is a monetary um, there is a maximum amount uh, of which na kung kailan mako-consider as capital outlay ang isang asset. So if the item is worth 15,000 and more, so pwede na siyang ma-consider as a capital outlay. The second category of the public or government expenditure is the current operating expenditures, in which it has two components: the personal services and the maintenance and other operating expenses, or MOOE. These are purchases of goods and services in current consumption in the current year, of which its benefit will not extend beyond the fiscal year. Or, again, uh, if the amount of the purchased or procured goods and services is less than 15,000, it will be considered as a current operating expenditure. So the public and government expenditures are also grouped according to their functions. We have the economic development expenditures, social services or social development expenditures, the general government or general public services expenditures, national defense expenditures, and public debt. So economic development expenditures are expenditures on agriculture and natural resources, transportation and communications, commerce and industry, and other economic development efforts. So these are expenditures that are for the development of the economy of the Philippines. Social services or social development expenditures are government expenditures on education, public health and Medicare, labor and welfare, and others. So expenditures made by the DepEd, DOH, Department of Labor, are classified as social services or social development expenditures. General government or general public services expenditures are expenditures for the general government, legislative services, the administration of justices, and for pensions and gratuities. National defense expenditures are subdivided into national security expenditures for the maintenance of peace and order. Public expenditures may further be classified according to the nature of funds: the general fund, special fund, and bond fund. So ito yung expenditures na kung saan nagkakaiba lang kung saan kukunin ang pondo. So there will be expenditures now will be coming from the general fund of the government. There are expenditures that will come from the special fund, and there are expenditures that will come from the bond fund of the government. So yun lang, um, sources of funds for public expenditures. On the other hand, public revenues complement public expenditures and cover all income or receipts of the government treasury used to support government expenditures. Classical economist Adam Smith categorized public revenues based on two principal sources, stating the revenue which must defray the necessary expenses of government may be drawn either first from some fund which peculiarly belongs to the sovereign or commonwealth and which is independent of the revenue of the people, or secondly, from the revenue of the people. Adam Smith's classification relied on the two aspects of the nature of the state. First, the state as a juristic person with an artificial personality, and second, the state as a sovereign or entity possessing supreme power. Under the first aspect, the state could hold property and engage in trade, thereby deriving what is called its quasi private income or revenues, and which peculiarly belonged to the sovereign. Under the second aspect, the state could collect by imposing charges on the revenues of its subjects in the form of taxes. So in the Philippines, public revenues are generally derived from the following sources: tax revenues, capital revenues, grants, extraordinary income, and public borrowings. Tax revenues are compulsory contributions to finance government activities. So these revenues are collected by the Bureau of Internal Revenue, or BIR. Next is capital revenues, which are proceeds from sales of fixed capital assets or scrap thereof in public domain, and gains on such sales like sale of public lands, buildings, and other structures, equipment, and other properties recorded as fixed assets. Grants are voluntary contributions and aids given to the government for its operation on specific purposes in the form of money and or materials and do not require any monetary commitment on the part of the recipient. So some grants are contributed by foreign countries to help us uh, in our expenditures. Fourth is the extraordinary income, the repayment of loans and advances made by the government corporations and local governments, and the receipts and shares in income of the Bangko Sentral ng Pilipinas and other receipts. Public borrowings are proceeds of repayable obligations, generally with interest from domestic and foreign creditors of the government in general, including the national government and its political subdivisions. So, more specifically, public revenues are classified as follows: general income and specific income. Under the general income, included here are subsidy income from the national government, subsidy from central office, from regional office or staff bureaus, income from government services, from government business operations, sales revenue, rent income, insurance income, dividend income, interest income, sale of confiscated goods and properties, foreign exchange gains, miscellaneous operating and service income, fines and penalties, government services and business operations, and income from grants and donations. Under the specific income, we have six: income taxes, property taxes, taxes on goods and services, taxes on international trade and transactions, taxes on international trade, and I, we have seven other taxes, fines and penalties, tax revenues, and other specific income.